Welcome to session. Myself, Dr.A.Jagadhambal, Assistant Professor, Department of Business Administration, UG, Dr. SNS Rajalakshmi College. I am going to present about direct tax. In that, transfer of capital, calculation of capital gains, transfer of asset, the conveyance of something of value from one person, place, or situation to another. The law recognizes that persons are generally entitled to transfer their assets to whomever they wish and for whatever reason. Transfer of asset, the conveyance of something of value. It is a value from one person, place, or situation to the another. The transfer of asset. 7 ways of transfer of assets. 7 ways assets to legal hires from one person to another person. In that, capital transfer or transfers in which the ownership of an asset other than cash or inventories changes from one party to another, or which obliges one or both parties to acquire or dispose of an asset other than cash or inventories, or where a liability is forgiven by the creditor. In the transfer of asset, capital transfer or transfer in which the ownership of an asset. In ownership of an asset, it is first we discussed about the capital asset. What is meant by capital asset? While computing income under the head income from capital gain, the most important thing to understand is the definition of the capital asset. In that, any stock in trade, raw materials, consumable stores held by any assessee for the purpose of his business or profession, it is to be noted that any securities other than stock in trade which is not held by the foreign institutional investor. It is the stock in trade, personal effects, that is a movable property including wearing apparel, motor car, electrical appliances, refrigerator, furniture, etc., ornaments excluding jewelry, drawings, paintings, or any work of art held for personal use by the assessee or any other member of his family dependent on personal effects. Then small size equal to agricultural land in rural India, but the land should not be situated. This is called the capital asset. Capital transfer example. Capital transfer consists of the transfer of ownership. It is the consist of the transfer of ownership of a fixed asset, the forgiveness of the liability, and the transfer of cash that is linked to or conditional one. The acquisition or disposal of a fixed asset, the transfer made by the migrants as they move to a new country, or an example of a capital. Current transfer and capital transfer. Current transfer are made out of current income. Capital transfers are made out of the accumulated wealth of payer. Current transfers are meant for consumption purpose. Capital transfers are made for a capital formations. In that, we discuss about the calculation of the capital gain. First, we discuss about the what is meant by capital gain. Defining capital asset. Capital asset: land, building, house property, vehicles, patent, trademark, leasehold rights, machinery, and jewelry are a few examples of capital asset. That is a land, building, house property, vehicles, patents, trademark, leasehold rights, machinery and few jewelry are the few examples of capital asset. The following do not come under the category of capital asset. Any stocks, consumable or raw material held for the purpose of business or profession, personal goods such as clothes and furniture held for personal use, agricultural land in rural India. These are all not under a category of capital asset. Uh, in case of capital asset classified into two category, one is short term capital gain, another one is long term capital gain. Short term capital gain, we calculate that final sales price minus cost of acquisition, house improvement cost plus transfer cost. In long term capital gain, it is the final sale price minus transfer of cost, indexed cost, acquisition cost, indexed house improvement cost. These are all the ways of calculation of capital gains. Thank you.